Hello, friends, and welcome to another video by the Option School. This is your friend Pradeep Singla. So, we are starting a new series which is named as Let's Talk Option Strategy. This is video number one for this new series. We will be posting around 16 videos in this. So, today I will be talking about a very popular and very useful strategy, Iron Condor Option Strategy. This will be really useful for all of those who want to learn what is the strategy. And in the end of this video, I'm making a new announcement also, which can be useful, which can be very useful in your learning journey for options trading, especially in strategies, right? So let us quickly go through what is iron condor, how it is created. I will also show you some examples of that. It's a four-leg strategy. Four legs means one, two, three, four. There are four different strike prices which are involved in iron condor strategy. Two legs are of selling, so two legs we are selling a call and selling a put option, and another two legs are for buying. So when you're selling a call, you're buying a higher call. When you're selling a put, you're buying a lower put, so that the strategy becomes limited profit and limited loss strategy. One of those strategies which can be really stress free for a normal experienced trader. Now, when to do it? If you see copybook style, whenever a trader expects that the market to be range bound, iron condor is a good strategy. Now here there is a big catch. Range bound means what? When I'm talking about Nifty, even if market is within 1,000 points, that is also range bound, but 1,000 points is a very wide range. Even when markets are volatile, the Nifty tends to remain between 1,000 to 1,500 points. So every time you can say iron condor is a great strategy, because ultimately we see in most of the cases that Nifty stays within those 1,000, 1,200, 1,300, 1,400 points. So range bound doesn't mean that okay, market moves only within 200, 300 points. Range bound means that okay, there can be a particular range. So there can be different iron corner strategies, which I will give you some examples that okay, what is a simple iron corner strategy? Can there be aggressive? Can there be a more aggressive iron corner strategy? Depending upon what kind of range the trader is expecting. So even in volatile markets, which means that okay, on day-to-day basis, we may see that okay, market is making moves of 100, 200 points here and there. But overall, if you have eagle's eye view on broader markets, they may be very well within those 500 or 700 or 1,000 points. So even a volatile market can be a range bound market also. So selecting a range for the trade is very important when you are trading iron condor. What is the other important thing? What is the margin required? Now what has happened is this is one of the best strategies used, at least in western world. So in India also, from last few years, when new margin regulations have come, the margin requirement has drastically reduced in iron condor. But again, it depends on the width of the trade. We will again show you with three different examples of iron condor for the same month, requiring different margins. In Nifty, a simple vanilla iron condor can be created in as low as 40 to 41,000 rupees. If we increase the width, it can take 50 to 60,000 rupees also. What do I mean when I say increase the width? That means I'm increasing the gap between the sold call and purchased call, or I'm increasing the gap between the sold put and the purchased put. In that case, there is a little bit of extra risk, because extra risk is taken. So for every 100 points, extra 5,000 rupees are blocked by the market. And one good thing about iron corner is it's a non-direction strategy. Even if the market doesn't move here and there, in fact, it wants that okay, market should not move significantly in any direction. So if market remains within that particular range, whether you know it is bullish or bearish, it can always give you profit if market is within that range. So that is why it can be quite successfully done in stocks also. And another good thing is even in stocks, the margin requirements are pretty low. So how many break-even points are there? Whenever you are starting a strategy, we should be very clear that okay, what is the point at which I will start losing money on the upside? What is, in case there are two break-even points, there is a break-even point when market goes up. There is a break-even point when market goes down. So as a trader, I should be very clear what are those break-even points and how many break-even points are there in this strategy. So in iron condor, there are two break-even points, one on the upside, one on the downside. So if market remains within these break even points till expiry, trader will be trade will be profitable. But in case market breaks any of the break even points, then definitely trade can go in a limited loss. As I said, iron condor is a strategy with limited loss and limited profit, but how much that profit can be, we will see, right? But in case it is breaking any of the break even points, then definitely we require some adjustments in the trade. So, what kind of profitability can be expected in iron condor? A profit of 3 to 5% can be expected on monthly basis. Again, I am not recommending this strategy on weekly basis, because this is the strategy which is working on theta decay. Theta decay may be slow on monthly basis, but the range of the market which you get on monthly basis is pretty high compared to a weekly iron condor, where the range what you get will be low and you are trading four different legs. So when you're trading four different legs, you are selling and then you are buying, so that means you will be paying brokerage for 8 lakhs. So I would like to have 3 to 5% return, so that uh, the trade becomes very brokerage efficient. A lot of people say that okay, we can make 1% every week, but then that trade may not be very brokerage efficient. Out of that 1%, you may be shelling out 0.25%, 0.3% on brokerage, STT and other charges, so your net return gets reduced significantly. So if we are trading without adjustments, there can be loss also to the tune of 3 to 5%. Now there are two things. It is not that okay, always the strategy will be profitable. So there will be 7 8 months when you will make some profit. There can be 2 3 months when you make some loss also, if you are trading it without any adjustments. But if you're trading with adjustments, then adjustments ensure that okay, the losing months, those 3 4 months where you might lose in iron condor, the losses are reduced to less than 0.5%, or where they are very very insignificant. And where whichever months you are winning, obviously those months you may not require much of adjustments. Those months will give you full profit. There can be 3%, 4%, 5%, even 6% profits in iron condors. Once I give you the examples, it will become more clear. So let me show you the first example of iron corner, which is a very simplistic example. Here, what we have done, we have sold 18,000 put. Markets are at around 18,400. See it here. So what we have done, we have sold 18,000 put, and immediately 100 points below 17,900 put we have purchased. So in this bargain, we have received some money, 162 minus 137, which is around 25 rupees on the put side. On call side, again, we have gone far away, sold 19,000 call and purchased 19,100 call. All these things are done for a same month, which is next month, right? Now, in this case, also 138 minus 109, we have received around, you can say 29 rupees. So 29 plus 25, around 54 rupees we have received. So our maximum profit is that multiplied by 50, around 2,700 rupees. And the whole game, if you see, there is a gap of 100 points on call side as well as 100 points on put side. So maximum this trade can lose is 5,000 rupees. 100 into 50, so out of that 2,700 or 2,695 is already taken by us as a credit. So 5,000 minus this 2,305 is our maximum loss, and investment required is 41,583. And based on this investment, this profit can be as high as 6.48%. But as an experienced trader, you may not be sitting till end in the trade. As soon as you get your 3 4%, you can exit the trade. Now the trade has two break even points. If you see, this is one on the downside and this is one on the upside. Now the downside is 17,947. So if market starts moving towards 17,947, the trade may start giving you little loss. It's not that okay, if market touches 70,947, immediately the trade will give you loss. It's not like that. Even if market goes to 70,940, the trade may be into small profit. It all depends when this happens, whether it happens in the first few days or whether it happens after 15 days. And similarly on the upside, 19,053, if market crosses this level, there can be loss. So this is the maximum loss which can happen if you are not doing any adjustment. This is the maximum profit which can happen if you are not doing any adjustments. So overall loss risk reward is 1 is to 1.17, which is decent. And obviously we know that okay, we will not be sitting in the trade till expiry and exposing ourselves to the tantrums of expiry. any point in time we are getting good profit, you can exit the trade. So getting 2-3% almost always is quite possible because you have got a good 1,000 to 1,100 points range in this trade. So this is a simple example where we have purchased 100 points uh, of protection for our sold position of 18,000 and 19,000. Market is almost in the middle, 18,400, right? This is one example of iron condor. If I show you a slightly aggressive iron condor here, what we have done, market almost at the same level, we have sold the same position of 18,000 put, we have sold 19,000 call. Now instead of buying 100 points protection, we have purchased 200 points protection. So here we have purchased 17,800. So what it has done, it has given me slightly extra credit. Remember in the previous case, the credit available was around 25 rupees on put side. In this case, 65 minus 18, almost 47, 48 rupees credit is available on the put side. And on the call side also, what we have done, we have purchased 19,200, we have not purchased 19,100. So on call side also 132 minus 82, almost 50 rupees we have got. So overall we have received almost 97, 98 rupees in the trade. So this is showing me 4862, which is 10.5%. So remember, because we are buying protections at a slightly higher level, at a higher gap, so our requirement increased by almost 5,000 rupees. In the previous case, it was almost 41,000. In this case, it is 46,000. Was 100 points extra uh, gap we have kept in the protection. And max loss has also slightly increased. So overall, it is almost 1:1 kind of a trade. And if you see, the break evens have also improved because we have received more credit. In the previous case, if you see, we have received 2,695 only. In this case, we have received 4,862. So accordingly, the break even points have also moved. So now we have a break even point which is having a range of 1,200 points, right? So within these 1,200 points, if market remains, this trade can be very profitable. Since we have 10.57% kind of a profit possible in this trade, even at 50% decay, we can exit the trade, which would very well mean we are taking 5% home from this trade without any adjustment also. If I show you slightly more aggressive trade, then what we will do, we will not buy the similar protection. I will show you another example. Meanwhile, if you're already our subscriber, please go ahead and like this video. And if you're not our subscriber, please go ahead, subscribe to this channel, and we will be posting a lot of videos on these strategies. And then click on the like button also. More aggressive trade, if I see, I am again using the same example. I am selling 19,000 call, I am selling 18,000 put. But what I am doing is I am buying a protection at 70,600 and I am buying a protection at 19,400. So instead of 100 points, now I am buying a protection of 400 points. That exposes me to a bigger risk, no doubt about it. But if you see, my capital involved here is 53,000. Again, from the first case, 300 points have increased in protection. There it was 100 points, there it is 400 points. So 300 into 15, 300 into 50, almost 15,000 rupees more. And now you can make even 8,000 rupees from this same trade, which boils down to 15%. And even your break even point has got widened to 17,838 to 19,162. So which is how much? Almost around 1,400 points or 1,350 to 1,400 points, which is a very wide range even if markets are volatile, right? So range has improved. Uh, with little bit of adjustment, this kind of trade can give me early profit. I am not looking for 100% of decay. I am looking for only one third of decay. Even if I get one third of decay, I am 5% plus. I can quickly close the trade. So different examples. There can be a simple iron condor. There can be slightly aggressive. There can be slightly more aggressive iron condor also. So which one to choose out of these three, or there can be few other categories, which one to choose? It purely depends upon your risk profile and your adjustment plan. If you have a good adjustment plan, I'll say definitely go for a more aggressive iron condor, so that your profitability comes little bit faster. The theta decay will be much faster in that. So in case you have a great adjustment plan, aggressive iron condor can be very good trades. But in case you are not having a very good adjustment plan, or you're not having any adjustment plan, then I will say go for as conservative iron condor as possible, because we cannot risk our capital. So if you understand iron condor properly, overall it is a good candidate to clock something like 30% returns on annual basis, which very well means on an average around 2.5% to 3%. So what will happen? There will be some months when you have made let's say 5%, and let us say you have done it for 7 8 months of 35 to 40%, and there will be 3 4 months where instead of making 5% you have lost 2%. So another 10% can go back in it. So ultimately, anything ranging from 25 to 30% can be clocked very well from iron condors. Now, for that, you need to have experience that okay, what has happened to iron condor strategy if I have done it in October? What have happened to iron condor strategy if I have done it in September? So all that experiences you can get if you become member of our strategy members group. In the YouTube channel, we have created another group which is a strategy members group. In addition to gold and diamond group membership, there is strategy members group. So what will happen in this? We will be posting these videos in which we will be covering basics of many strategies, more than, as I said, 15 16 strategies we will cover. And every month, only for this members group, which is strategy members group, we will be posting that okay, what was the performance of this strategy in the previous month. So now we will be posting that okay, how iron condor behaved in the month of October, and in December we will say okay, how iron condor behaved in the month of November, whether it was profitable, how much was the profit, whether it was loss, how much was the loss, whether it gave you any opportunities during the series to book profit and get out of the trade. If you are sitting till end, then it may be in loss. But if I have exited the iron condor, let us say on 20th of the month, then how much profit I am able to clock. So minimum three strategies every month we will be analyzing based on the previous month's real data on back testing, right? So we will be doing it for minimum three strategies, but we can do it for more than three also in this strategy member group, and all these videos will be posted every month. So maybe first week you will find uh, one back testing, second week you will find another, and second week you will find the third also. And if you're doing more than three, then fourth and fifth strategies also will be posted. So what has happened in the previous month, to begin with we might be doing for more than 1 month also. So to begin with, for iron condor we will be posting for the month of October also, we'll be posting for the month of September also. So in what will happen in a period of, let us say, next 6 months, you will see that okay, this iron condor strategy, he has shown me how it performed in September, October, November, December, January, February. So in last 6 months it has given profit for, let us say, 5 months. 1 month was bad, so this is a good strategy. Or otherwise, if you find that okay, in last 6 months, out of 6 months, 5 months this strategy has given a loss of 4,000 rupees, 1 month it has given a profit of 5,000 rupees, still it is making a profit of 1,000 only. So this may not be a suitable strategy for me, so maybe let me explore another strategy. So there will be a back testing, a battery of back testings available for so many strategies. Over a period of time we will build that up, and then you will find that okay, which is that strategy you are liking, and in which strategy your temperament is working better. And then accordingly in your trades, slowly you will be able to finalize that okay, this is the strategy which is good for me. So to become a member of strategy members group, most welcome to join that. You have to click on the join button. If you're already our gold or diamond member, it is purely your choice. You can upgrade it to strategy members group, or if you're not our gold or diamond member, then you can straight away join strategy members group. Whatever exclusive videos are available for gold and diamond members, they will be also always available to strategy members group. Plus there will be many new videos every month giving you the performance analysis of uh, many strategies for the previous month. For more on iron condors, you can check our app content also. To download our app, there is a link given in the description for the Option School app. You can go and download the app. Thanks for watching, and we will be coming up with our next video very soon on strategy series video number 2, and we will be giving you all the parameters of that strategy also. And see you in that next video. Thanks for joining. All the best. Thank you.